Hey everyone, and welcome back. We're diving into a topic that I think is on a lot of people's minds these days.
Yeah.
Refinancing, it seems like.
It's a hot topic.
It is. It's everywhere you turn. You hear about these incredible refi deals, and everyone's talking about slashing their payments.
Yeah. And with interest rates being what they are.
Right. It's like a refi gold rush out there.
It really is.
But how do we know
How do you know?
if it's right for us?
hmm
Like, is it actually all it's cracked up to be? That's what we're going to uncover today.
I think the very first thing you have to do before you even start looking at all those shiny offers is you've got to understand your current mortgage situation.
Okay, so like, what are we talking about here?
Well, dig out your mortgage paperwork and really look at it. What's your current interest rate?
Uh-huh.
Are there any benefits or clauses you might be forgetting about?
Oh, interesting.
Because refinancing might mean you lose those.
You know what that's like.
Yeah.
It's like finding a $20 bill in an old jacket.
Right.
You're like, oh my gosh, I had no idea this was here.
Exactly.
That's awesome.
Yeah.
So you're saying before we jump into any refi frenzy, we need to know what we're already working with.
Absolutely.
Got it. So
Yeah.
let's say we've done our homework.
Okay.
We've got our current mortgage details all laid out.
Uh-huh.
Where does our credit score come into play?
Your credit score is huge in the refi process.
So it's not just for like bragging rights or
No, not at all.
feeling good about yourself.
It really impacts what kind of interest rate a lender is going to offer you.
So they're looking at that to see how risky it is to lend to you.
Yeah, exactly.
Okay, so when we're talking about credit scores, are we talking like checking Credit Karma or
That's a good question.
what are we looking at?
So Credit Karma can give you a general idea,
Okay,
but mortgage lenders look at a very specific type of score
okay.
called a mortgage FICO score.
A mortgage FICO score.
Yeah.
Okay, so what makes that one so special?
Well, think of it this way. Credit Karma is like a general checkup. It gives you an overall picture. The mortgage FICO score is like a specialist. It zeroes in on the stuff that's specifically relevant to mortgages.
Makes sense.
It's got a different scoring model,
Oh.
and it pulls data from way more sources than just the credit bureaus.
Interesting.
And it really hones in on your payment history.
So like all those on-time mortgage payments really matter.
They really do.
Okay, that makes sense. But it's
Yeah.
not just about the score itself.
Oh, you're absolutely right.
What about our actual credit report?
You've got to review that for errors before you even think about applying to refi.
Why is that so important?
Well, you'd be surprised how many people have inaccuracies on their reports
Oh, yeah.
that are dragging their scores down without them even knowing.
Oh, I actually had that happen to me once.
Really?
Yeah, there's this credit card on my report
Oh, no.
that I never even opened. It was like a ghost debt haunting me.
I hate when that happens.
Right. But I was persistent, and I got it removed, and my score actually went up.
Good for you.
So yeah, it's definitely worth checking.
It is.
Okay, so we've got our credit score looking good. We know our current mortgage inside and out.
Right.
What's next?
So the next big thing lenders look at is your debt-to-income ratio, or DTI.
DTI. Okay, break that down for me.
Basically, it's how much of your income is already going towards debt payments.
So if you're already stretched thin,
Yeah, they're going to be hesitant to add another loan to the mix.
that makes sense.
Think of it like a pie chart of your income.
Okay.
Lenders want to see a good chunk of that pie available for a new mortgage payment.
Okay, so what's a good DTI?
Most lenders want to see a DTI of 45% or lower for refinancing, but some loans like FHA or VA loans,
Yeah.
they might be a bit more flexible depending on other things like your credit score and down payment.
Okay, makes sense. So what if someone's looking at their DTI and they're like, oh, this needs some work.
Yeah.
What can they do?
Well, you can try tackling high-interest credit card debts.
Okay.
Even small changes in your monthly debt obligations can really make a difference in your DTI.
So like even chipping away a little bit can make a big impact?
Yeah, exactly.
Okay, great. So we've got our credit score in good shape.
Yes.
Our DTI is looking good.
Yeah.
We understand our current mortgage.
You got it.
So anything else we need to be thinking about?
Well, I think it's really important to look beyond just that lower interest rate.
Okay.
You need to really evaluate that long-term financial picture.
It's easy to get caught up in those like lowest rate ever ads.
Oh,
But what about those closing costs?
Ooh, those closing costs.
Right.
Yeah, they can definitely add up.
Oh, tell me about it. I remember closing on my first place,
Yeah.
and those fees were like, whoa.
Right.
Didn't see that coming.
It's a surprise.
Yeah, so how do we make sure refinancing is actually going to save us money in the long run?
You've got to do your research.
What?
Compare the total cost of your current mortgage to the potential refinance.
Uh-huh.
Factor in all the fees, the penalties, even how long you plan to stay in your home.
Yeah, that's a good point.
If you're planning to move in a couple years, refinancing might not make sense.
Okay, so you got to think long term.
Yeah.
Got it. What about those zero closing cost offers you see everywhere?
Ah, yeah.
Are those legit or is that just like a trick?
They're real, but there is more to the story.
Okay, I knew there had to be a catch.
Essentially, with zero closing cost refinancing, you're not paying those fees up front.
Okay.
Instead, you're rolling them into your loan amount.
So it's like delaying the inevitable.
Kinda, yeah. Zero closing cost can be tempting if you're tight on cash right now.
Right.
But just remember, since you're borrowing a larger amount,
Uh-huh.
your monthly payments and the total interest you pay over the life of the loan will be higher.
So it's like a trade-off
It is.
between that short-term relief
Yep,
and maybe higher costs later on.
exactly.
If you're planning to stay in your home for a while, those rolled-in costs could really add up.
They could.
But if you need that flexibility right now, it might be worth considering.
It might.
Tough call.
It is a tough call. That's why it's so important to weigh the pros and cons
Yeah.
and figure out what aligns with your financial goals.
Okay, so we've talked about our current mortgage, our credit score,
Mm-hmm.
DTI long-term thinking.
Right.
But what about finding the right lender?
That is a big one.
Yeah.
And that's where things get really interesting.
All right, well, let's take a quick break,
Okay.
and we'll dive into that right after this. So we're back, and I'm really curious to dig into this whole lender thing
Yeah.
because I feel like that can be kind of a confusing part of the process.
It can be. There are so many options out there.
Yeah, and it's like, who do you trust?
Exactly.
You know, you see those ads with the like unbelievably low rates.
Yeah, those can be really tempting.
And you're like, oh, that sounds amazing. Sign me up.
But you really have to dig a little deeper.
Right.
Sometimes those super low rates come with hidden fees
Oh, sneaky.
or stricter requirements that might not actually work for you.
So how do we find a lender who's not going to pull any fast ones on us?
Transparency is key. Okay.
You want a lender that's going to lay it all out on the table,
Uh-huh.
explain everything clearly,
Yeah.
and really be invested in helping you make the best decision.
It's like finding a good mechanic.
It is.
You don't want the one who's just trying to upsell you on stuff you don't need.
Right?
You want someone who's going to be honest, give you your options,
Yeah.
help you make a good decision.
Exactly. And that's where working with a trusted consultant can make all the difference.
Okay, so what's the difference between like a consultant and a broker?
A good consultant's going to take the time to really understand your financial goals and guide you through all the complexities of refinancing.
So it's more personalized.
It is.
Okay, that makes sense. You know, speaking of trusted consultants,
Yeah.
I've heard great things about KuberFi.
They're
I'm
fantastic.
to stand out.
Well, they've really built a reputation for being professional,
Oh, okay.
ethical, and they have a lot of expertise. They're all about client satisfaction. I'm actually looking at some of their client testimonials right now.
Oh, yeah.
They are glowing. People are raving about how smooth KuberFi made the whole process.
That's great to hear.
And how they're not just focused on closing deals, but actually helping their clients make informed decisions.
That's what it's all about.
Yeah, that's impressive.
Yeah.
So it sounds like they really walk the walk.
They do. And you know what else they do? They encourage clients to shop around.
Really?
Yeah, even if they have a lender that like already,
Why would they do that?
they believe that informed decisions lead to the best outcomes.
So they're not afraid of a little competition?
Not at all. They're confident in what they offer.
Okay, well, that says a lot.
I think so.
If you're even thinking about refinancing, it sounds like getting a quote from KuberFi is a good starting point.
Definitely.
Okay, so we found our lender.
Right?
We feel good about them,
Good.
but we still have those closing costs to deal with, right?
We do those pesky closing costs.
I know we talked about zero closing cost refinancing before,
Uh-huh.
but can you break down exactly how that works?
Sure. So think about it this way. Normally, you're paying those closing costs up front,
Yeah, like a separate bill.
right? With zero closing cost refi, you're basically adding those fees to your total loan amount.
So it's like rolling a snowball downhill. It starts small,
Yeah,
but it gets bigger as it goes.
I love that analogy.
Right.
It's perfect.
Yeah.
So zero closing costs sound great if you don't have a lot of cash on hand.
Right.
But because you're borrowing more money, your monthly payments are going to be higher.
Okay.
And the total interest you pay over the life of the loan, that's going to be higher too.
So it's like you're paying for it one way or another.
You are. It's really about choosing what works best for your situation.
Right. So immediate relief versus potentially higher costs in the future.
Exactly. If you're planning to stay in your home for a while, those added costs could really snowball.
Yeah. But if you need that flexibility now, it might be the way to go.
It might be.
Tough decision.
It is, and that's why you got to weigh your options and see what aligns with your financial goals.
It's amazing how much goes into making these decisions about refinancing.
It is a lot to think about.
We've covered credit scores, DTI types of loans, choosing a lender, and closing costs. It can feel overwhelming.
Yeah, it can be a lot to digest all at once.
So what does all this mean for someone out there who's listening and thinking about refinancing?
I think the main takeaway is you don't have to do this blindly.
Okay.
Understand the key factors, evaluate your options.
Yeah.
Choose the right loan and the right lender for you.
Right.
That way you can make a decision that's good for your long-term financial well-being.
So no more jumping into refi deals just because they sound good on the surface.
Exactly. Knowledge is power.
Right. So before we wrap things up, I want to leave you with something to think about.
Okay.
Imagine you've gone through the whole process. You've found the perfect loan. Everything's signed, sealed, delivered.
You got it.
What's next? What are the possibilities now?
That's a great question.
Right.
Yeah. It's like refinancing opens up all these new doors for you.
So it's not just about like, oh, great, my payments are lower now. I can just go spend that money on whatever I want.
It's about using that newfound breathing room in your budget.
Right. Strategically.
Exactly.
Okay, so what are some smart moves people can make after they refinance?
Well, you could think about investing that extra money you have each month.
Oh, yeah, make that money work for you.
Exactly. Build your wealth over time.
Okay, what else?
Maybe you've been putting off some home improvements.
Ooh.
This could be your chance to finally tackle those projects.
Spruce things up a bit.
And those home improvements, they could actually increase the value of your property.
So it's like a win-win.
It is.
You're making your home nicer and potentially boosting its value.
Exactly. And let's not forget about those long-term goals.
Right, retirement saving for college.
Exactly.
Right.
Refinancing could give you the extra cash to put towards those things.
It's like setting yourself up for a more secure future.
Yeah, planting a seed that will grow into a beautiful financial tree.
I love that analogy.
Right. But it's important to remember everyone's situation is different.
Of course, what works for one person might not work for another.
That's why it's so important to have a trusted financial advisor in your corner.
Yeah, someone who can help you figure out the best plan for you.
Exactly. And if you're looking for that kind of guidance,
Mm-hmm.
you know who to call.
KuberFi.
KuberFi, they're the financial gurus who can help you navigate all of this.
Awesome. So whether you're just starting to think about refinancing or you have a million questions,
Reach out to KuberFi.
they're there to help you every step of the way.
Exactly. And remember, refinancing, it's just one tool in your financial toolbox. But by making informed choices and having a solid plan, you can build a brighter financial future for yourself and your loved ones.
That's what it's all about.
Well,
that wraps up another deep dive.
it does.
We've covered a lot of ground today. But remember, the learning doesn't stop here. Keep asking questions and keep taking control of your financial journey.